Can't hear you.
Yeah,
Yes, exactly.
Patrick, we can't hear you.
Yeah.
That is,
Yeah,
yes,
Yeah.
now, yes.
Finally.
All right, let's do it again. GM, welcome everyone to the Get Real podcast with Mu Digital. We've made it to episode 8. It's been a minute since we've come back. We've been on the conference circuit, but awesome to be back with an esteemed panel of guests. We've got Wojtek, co-founder CEO of Accountable. We've got Aneirin, co-founder CEO of Failsafe, and Chilli from Redstone Oracle. So maybe we can just do a quick round of intros. I'll throw it to Wojtek, then we'll go Aneirin, then Chilli.
Okay, so as we discussed prior to going live, usual suspect here, so probably some people already know what we do, but pleasure to give a quick summary. So at Accountable, we mainly focus on giving counterparties means to prove what they're doing off-chain and on-chain while protecting their privacy. And at the moment, we are also going live on Monad, actually, together with MU Digital. Maybe we're going to touch upon this in this podcast with our Vault infrastructure. So counterparties will be able to create verifiable yield opportunities that this space, especially right now, definitely deserves.
Hello. Thank you, Patrick and Cholo. Happy to report that I think longtime friends, having spent the past 4 years in crypto together. And nice to meet you, Wojtek and Chilli. Super excited to be a student on this podcast. My name is Aneirin. I'm the CEO and co-founder of Failsafe, backed by Sequoia and Dragonfly, and we do cybersecurity for DeFi protocols. Everything from security audits through to agentic reviews and OPSEC reviews, all the way to runtime monitoring.
Chilli, over to you.
Is he frozen or? Oh, a bit laggy, I think.
Maybe I can tell what Redstone does. So Redstone is the fastest growing oracle. That's number one. They work with Accountable. They're going to be on Monad on day one. Chilli is head of BD, or sorry for maybe similar type of title. Great guys, team from Poland. All the best, right?
Awesome, cool. Well, Chilli's working through his tech. I think we can get started with the panel. So I think the reason we wanted to bring you guys together is it's a super interesting time in DeFi now, and I wouldn't necessarily say in a positive way. There's a lot of uncertainty, a lot of FUD right now regarding stablecoin products, regarding yield products. And part of that has to do with some very high profile either DPEGs of yield type products or more products that are marketed as stablecoins, as well as just straight smart contract hacks, which has always been a problem in crypto, really since the industry's been around. So wanted to start with some of the bigger events that we're all seeing on the timeline. And maybe I'll turn it to Wojtek first. Looking into different stablecoin constructions, not particularly naming certain events or certain stablecoins, we have seen some pretty high profile failures of these type of products, which have started at the stablecoin level, has some involvement with the risk curator level, and some level of just the amount of risk that's being put on that on the token. So curious your perspective on what's going on in the market now and how to make sense of this all.
So to be honest, it was like, I think the last time we spoke, we discussed it, that this is only a matter of time when these things will start to play out the way that they started. And to be honest, like, it could be just the beginning, right? Especially with this situation on the market that we have today. If you are tokenizing a hedge fund activity, basically, then some hedge funds will blow up, some hedge funds will do well, right? Like, that's the normal course of life. It's just so annoying that the term yield-bearing stablecoin was even created, because it's highly misleading, right? There is nothing stable about it. There is only unstable returns, lack of transparency. and and fraud. So for context, together with Redstone, we work on the proof of reserves, or as we call it, proof of solvency side of things. We are doing the verification. We are like this vacuum that basically takes all of the data sources, whether that's TradFi, DeFi, CeFi, whatever, and then Redstone takes the end result of it, which is the transparency feed that somebody's over collateralized or not, and puts it on chain, as opposed to, let's say, Etina hard coding in whole DeFi that we are one-to-one because we say so, and every 3 days you can actually see that this is the case. So there's one party that recently reached out to us. I cannot name the name because we are, it's usually the way like this. People that have something to hide, they want to sign with you 10 NDAs, right? And people that just do their job, they just go with the flow. So this is the prime example of it. And this stable coin, which is basically issued by a large layer 2, it's backed by unsecured loan to one hedge fund, where the reporting is 3AC style. We have the money. They are commingling all of the funds together, and they send you once a month, not a joke, a paper with their signature on it, produced by them, that everything is fine. So if you realize that majority of this industry is built upon these type of foundations, then it's only a matter of time when you see it. Stream was a great example of it. Similar structure, right? Like you give cash to somebody, see what happens. Flash crash comes, and then bye-bye. So not a surprise at all. We're going to see it more. The thing that we are doing together with Redstone is to make sure that you can distinguish the parties that are verifiable, and you're going to see the truth, that are transparent, and the ones that are not. And if there is enough of verifiable yield opportunities, we just hope that the ones that are not going to be meaningful, because nobody will trust them with the money. Same as with smart contract audits. Somebody doesn't have it, you don't touch it. Simple. So it's we need to do it collectively. We need to demand it from people. And if a project doesn't have transparency level that you require, you just don't touch it. You don't chase extra APY with a black box, because you're going to end up having 0 to your name. So these are my thoughts.
Awesome. Chilli, do you want to jump in there? What you guys are seeing from the Oracle side?
Yeah, absolutely. I mean, I think I 100% agree with Wojtek. And when this incident actually happened, we were joking about the fact that this space will never learn, because you have so much of potential to do it the right way, but you still want to, some of the projects still want to go, the shady route, or take shortcuts, or do it the wrong way, right? So I think adoption wise, what's very important is that we primarily also not just educate the people we work with, but maybe if we can, whenever, force them to follow the right track rather than do something sketchy on the back end. And on the Oracle side, at Redstone especially, this, by the way, is one of the core ethos, and which is why we also like working with Accountable, is that at Redstone, we believe we do not want to work with everybody, by default. And this is something I told Cholo also when we met, that we identify clients based on the potential, and we do a thorough research, number one, on whether this is going to be something that will blow up. Are there any number of failure points, how it is, and how the future would look like? And then we make sure that we work with very select few projects, but projects that we know have the potential and also are genuine, right? So I think that's my 2 cents on how we look at it.
Maybe just to add the final thing. So you touched upon like research, right? So when we are doing the integration, right, like we are actually integrating our software in a local infrastructure of these hedge funds, basically, right? And you can instantly see whether somebody is sophisticated or not, right? So there are teams that are, for example, filling in onboarding questionnaire, like the technical one, with such a level of detail, right? Like everything that they have, security, and so on and so on. And these guys are not fucking around, basically. But there are some that can barely follow the onboarding questionnaire that we give them. And you are supposed to run a couple 100 million in users' assets and say that you're going to be market neutral, this, that, if you don't have even idea, like, what's underneath.
Bingo.
And that's not only the problem, to be honest, with yield-bearing stablecoins or whatever. With market makers, it's the same. You would be surprised. These big names sometimes, they told us how you can prove how much money we have if we don't have how much money we have at a specific point of time, right? And these are names that everybody knows, right? And they have one database plugged to a fucking spreadsheet across their operations, and that's how they do it. And they mix everything: OTC, token market making, regular trading together. They have zero Chinese walls. So this space, to be honest, altogether, it's a fucking nightmare, basically, how it operates. And that's what we are trying to change. Because there are good people without the name, right? They are not called XYZ that everybody knows somehow. I don't know why. But they need to have means to prove that they are doing a good job, because maybe they can build their own name based on facts, not just, pretending that we are amazing. Anyway, good topic.
No, for sure. And I want to turn it to, so Aneirin, you have a little bit different perspective, but I know that you work with a lot of these type of companies. So curious, more on the sort of the off-chain, sort of the product construction side first before we go into smart contract risk, but curious your take as well.
I just love that we're comparing notes, working with different types of companies, because we see this exactly the same way that Wojtek has pointed out. Some teams know that they know their shit to the T. They know. They've gone through SOC 2. They know exactly. They've done this rodeo before, probably in TradFi, and the team that are maybe a Vietnamese chop shop that are pretending to be a US based fund manager, and that hey, we're absolutely not going to put our stamp of approval on this. So it's very true. I guess it's easy to dupe people in crypto just because there is so much. There's just so much greed. I think for us, what's exciting is security is just part of the greater trust and safety stack. So I love that we're all trying to figure out what those standards are going to be. Obviously, for the past 2-3 decades, SOC 1, SOC 2 has established what those standards should be for traditional fintechs. Trying to figure out what Web3 SOC is, and companies like Antina are doing a great job. We're working with regulators trying to figure out, hey, above, and beyond just what your smart contract says, do you have the right legal structure? Are the founders following certain OPSEC protocols? Are keys managed in a way that disaster recovery is a real thing? And you realize that after asking a few of these questions, these founders just they don't know, for example, what disaster recovery is. And so to your guys' point, yes, this place is still very much a bit of a nightmare. But hopefully what we're doing here is important work and working towards a bit of a foundation that's going to build a standard for what companies like Mu Digital are going to espouse moving forward.
Yeah, maybe, so Cholo, like this is something that, Cholo and I, before we started Mu Digital, we played around in DeFi Summer in 2021. I'm curious, your take. Cholo is probably a lot more degen than I was in the last cycle in DeFi Summer, but how have things actually changed from your perspective?
I think what Chilli mentioned, things haven't really changed. People haven't learned. Yeah. And I think at the end of the day, people forget that stablecoins essentially are liabilities. They're not a dollar. They're not like a dollar in your pocket where you can take it and spend it wherever you want. You can buy coffee in the corner cafe with it. It essentially is a promise by a company that says, I will back this up with dollars that I will manage as a fiduciary. And I think that this is where it's completely different to TradFi, where if you go out and promise someone that, you have to abide by a whole host of regulations. You have to have a fund manager license. You have to abide by like central bank regulations, and you actually have to act in the best interest of your customer. Whereas in crypto, people think that, I issued a stable coin, now I have this pot of money to go like levered long on the market and bet that Bitcoin's going to go 250K, and anything I earn on top of that is mine to pocket. And obviously that always goes turtle shaped. I think if we believe some of the rumors around some of these stablecoin failures, it is exactly that. Essentially, it was founders leveraging off of their own stablecoins in these money markets and then taking the borrowings and going just like gig along like Bitcoin or ETH or whatever shitcoin they wanted to speculate on. And yeah, that's the thing. I think people need to understand, realize that stable coins are not stable coins. They're not money equivalents. They're liabilities that there is a huge credit risk that you're undertaking. And I think everything that Accountable, Redstone, and Failsafe are doing is helping all of these consumers make that informed decision a little bit better, make that informed decision and understand that not all stable coins are created equal. While yields tend to be the focus, I think over time the focus should actually be on safety and transparency.
Yeah, and maybe just to segue a bit to, Chilli, you just published your report on yield bearing products and stable coins. Awesome report for anyone of our viewers that hasn't looked at it. Check it out. Yeah, it's awesome.
Thank you.
If you're a user, how should they be thinking about this landscape? I mean, obviously there's a lot of FUD right now, reason. How should a user be assessing risk and evaluating products in today's market?
So I would answer that in two parts.
This time I'm not gonna take over.
I was gonna say he just got rugged again. I think Wojtek, you got to answer the first part. You'll get the second
No,
part.
I didn't read the report, unfortunately, so I'm not gonna comment. But I heard great things about it. So maybe we keep it as a mystery for the users anyway.
Well, they have to read it themselves.
Yeah, exactly. That we're not gonna get a free spoiler here. You need to check it out yourself.
Let's let Chilli come back. So I'll amend the question a bit for you.
I'm back.
Oh, there you are.
Okay.
Yeah, Chilli, we got you back.
Yeah, I'm back. So I think I would like to answer it in two parts. The first one, if you're somebody new and don't know the space a lot, just stick to the major stable coins, at least from a safety aspect. But a couple of pointers on the fact that what I see, at least the trend, at least going forward. And by the way, the report has a bunch of different details that you can look into to understand this better. But what we are looking at is, number one, unless and until you have something what Accountable does, where you actually can show the backing in real time, I don't think you should trust even one bit that that's going to sustain for a long time. A very simple example, again, because me and Wojtek can't take names. We were chatting with a very big project, 150 million TVL in stablecoin, and we were discussing and finalizing details. And believe it or not, like 3 days before, Wojtek and we agreed that, okay, why aren't they responding? Maybe, there's something this, blah, blah, blah. And 2 days later, the depeg happens and it goes as bad as 0.45. Imagine. So this is just madness, right? I mean, what the fuck is even going on when you think about things like these, right? And this is not some random stuff. This is a very, very important project, especially in the Southeast Asian side, right? So the only thing I can say is that if you want to be safe, number one, stick to the major ones. And if not, at least look for something that shows you the real backing and gives you the confidence, yeah, okay, these assets are actually there, which is essentially what Accountable does. And then we push those prices on chain, right? So I think without doing that homework, you're going to end up burning yourself no matter what. So I think that's going to be my basic 2 cents on it.
It was actually above 200 million TVL, and here quote why they canceled the call with us to do the integration. Change of plans for the roadmap. So the roadmap has changed.
The roadmap was.
So anyway, right? Like
exactly.
You can instantly see that something is not going great, right? But yeah, like on that front, I fully agree with you. Of course, I'm a bit biased because I want everybody to use some sort of proof of reserves. But in general, like, what's your upside, right? Like, the deeper you go, the more promises you receive, right? The more APY, it's actually, APY, that's another discussion, actually. What's the base level APY? What's some token when it's gonna launch at a fully diluted valuation of billions of dollars, right? That will never materialize. So that's like, from a user perspective, like, think what you're doing, right? Like, what is the why are you chasing this extra APY? For what? Do you want to risk with your whole capital going after it? Is it a good trade effectively, or better stick with somebody that base level you trust? The rates are still good, but maybe not not extraordinary, right? So it also, you can change your mindset, of course, when you are a larger investor. Then you're never gonna do it, I believe, and go down the hill of these exotic options where you don't see what's under the hood. But even people that are like just trying to ape and make a big buck out of nothing, like, just think if it's all worth it. The whole market tells you that altcoins are not priced let's say with the same type of premium as they were in the past. So think whether this extra APY that you get from this token will be actually worth something at the end of the day.
So I just want to I want to double click on this a little bit, and Wojtek, I'll stay with you on this one. When Cholo and I started Mu Digital, the reason that we chose where we picked was because we observed that in crypto there's this barbell type behavior where some users only want stable coins, which is just hold your value and just never go down, or you want to ape, right? In traditional finance, there's an entire risk curve, and it's okay to sit across the risk curve. It just depends on your personal preference, how much you think you're comfortable with. It's for, let's put it in TradFi terms on credit. Like the risk-free rate is a US Treasury today, which is 4%. Even from a sovereign perspective, you can get twice that in some markets, like markets in Asia that we try to bring on chain, but it's still a sovereign. And the incidence of default on those countries is zero, since the inception of like the current government regime, post World War II. So there is a stack like across. And I think, where I wanted to go with this question is, there is a sort of a cottage industry which has grown up in the current market now, which is the risk curator. And the reason why a lot of, I guess, users like to look at the risk curator, because it's a stamp of approval, of a protocol, of a product. I guess the closest equivalent in traditional finance is like a ratings agency, like a Moody's or an S&P on a bond product. I'm curious your perspective of sort of how this is evolving and sort of what role they play in the current setup of stablecoin farms versus how users view the legitimacy of such products.
So I think that the recent situation also exposed that you can call yourself whatever you want, but in the end, what is the due diligence that you are doing, right? Because if you are accepting an exotic collateral on your market on Euler or Morpho, and then you're hard coding one-to-one the assumption that this collateral it's backed by something, and maybe you speak with the team, like I know one of the team, I don't remember, MEV or RE7 said, like, we spoke with the team of Stream Finance, right? And they assured us everything is okay. Like, come on, right? Like, it's basically the same type of unsecured loan type of situation where it's backed on trust me bro mentality. So, and there are risk curators, like for example K3 that works very closely with us, or Gauntlet, that they need to so when we are doing the proof of reserves dashboard, right, like this is usually some overview, like high level. We have the money it's distributed across multiple places, but you don't go to a lot of details because like people also need to keep their privacy in check. But if you are a risk curator on our network, then you can ask a protocol privately, what are your positions, right? Like, show me them, show me your leverage level across all of the exchanges that you are running, right? And these are they have finally means to ask these questions and to receive an answer from this protocol peer-to-peer, where nobody else would see it. Their IP is protected, but like the due diligence needs to be done properly, right? It needs to be on the data that people can trust, and not, trust me, bro, I have the money, all gonna be all right. So now we see this huge push. Actually, a lot of risk curators came to us that they need to improve their visibility and connect basically this data to their algos to their risk management software or whatever they have. I actually don't know whether they have any software, right? And use this to make better informed decisions. And another thing is that like people call them differently. It's risk curator, strategist, vault strategist, right? So it depends also on the type of counterparty, because for example, on accountable, people can claim capital to their wallet and they can deploy it wherever they want, but with the underlying verification that the strategy is running, right? Like a proof of strategy, effectively, that this is operated as it should be. There are platforms where, like Midas or Upshift, where you're using the accounts of them as an entity, and you tell them, I want to do something on Binance, they give you sub-account on Binance, right? And you have only a whitelisted selection of places where you can go. So that's also a difference, right? And there are places where you cannot go anywhere effectively, right? Like you can only stay in this one environment and that's it. So the more freedom you give to people, the better the checks should be, right? And LPs should be basically asking for as much transparency, especially if you go off-chain route with those strategies. Like otherwise, it's just a black box.
For sure.
I want to interject just super briefly, because this is super interesting to me. Because there's an adjacent problem that we find in security, which is most of the time, configuration risk is the biggest risk. You can have hypernative, you can have a bunch of audits done, you do all of the above, and on paper it looks fantastic. But the reality is, and the Achilles heel is often, hey, these things just haven't been configured correctly. So I'd be excited, for example, if accountable could be extended to verify that certain configs have been applied in the right way on, let's say, a security tool, or let's say with the way that an audit has been done on the freshest commit. Because beyond obviously just your counterparty risk, or let's say a strategy that your fund may be pursuing, it's things like, hey, have these guys just done crossed the T's and dotted the I's on all the normal hygiene stuff that they should be?
So actually we started going into this direction because there is a big demand, for example, for users of 4DeFi or Fireblocks to prove the policy, right? That you are actually only entitled to go to Aave, Binance, and whatever, Kraken, right? Because otherwise it's also like we say, we claim that this is the case, but who knows actually? So yes, this can be extended to multiple other things, and people can prove it locally. You don't need to, invite us to your workspace at 4DeFi. Of course, that's also, these parties need to want it to make it possible for us to prove it this way. But long story short, it's not like we are going to your custody environment, check everything with our own eyes, and then write a report. It is what it is. No, like people can do it themselves. They trust cryptography for it. They keep their privacy with it, and the end user should just get the guarantees that they can validate at any given point of time that this is still the case and that holds. Another cool thing that we are doing is that, for example, when there is a problem on the market with some stablecoin, for all of these dashboards that we have, we're gonna start adding an ability to check whether somebody is exposed to it. So you will be able to select, let's say, XUSD, go to, I don't know, let's say Aegis, Noon, MU Digital. You're going to input that and the check will be run in a private way, right? Are they exposed? Yes, no, across everything that they do. And, we also don't want to, because you need to balance, right? Like if we would give a full list of possibilities, then people will be like clicking every single thing, and then they can actually get the private info that it's not supposed to leak out of this type of checks. But like at the base level, I think it's super cool. And what we are gonna start pushing for our clients is that it's no longer enough to say, I have money on Ethereum, right? You need to say, I have money on Ethereum on Balancer in XYZ position effectively, because this type of proof of reserves also doesn't work well if somebody goes to the dashboard, there is XUSD or there's Balancer hack, and they see that they have exposure to Ethereum as a chain, but what the hell are they doing there? Maybe they have 100% of funds on Balancer V2, and then they are actually insolvent. So we are moving away from just taking the box, I have the money, and people should know as little as possible, to we need to demand more, because that's what's relevant, right? Like, what are your exposures, assets, protocols, and so on, and so on, and so on. So with Yuzu, which is Ouroboros Capital, you're gonna see this first iteration where they actually gonna open up the exposures to protocols and assets in a way deeper detail, and we hope that the rest will follow, because there's also sometimes misconception that if we verify somebody, then the protocol is safe. No, we are making things transparent. We show the truth, right? And the client decides how deep they want to go with that transparency. What do they want to show? We cannot dictate them that, like we can suggest, but in the end, they are the client, they are proving things, and it's up to them to choose the level of it. But we want to show more, and we should all demand it because it's in our best interest.
Yeah, and Wojtek, you teed up my next question, which is for Aneirin, which is another current event, the balancer hack. So, and this is especially troubling because it's an OG protocol, right? That's been around for a long time, and we all know that smart contract hacks is a tale as old as time in crypto. But Aneirin, for obviously the first step for early protocols is just the audit and make sure that when you launch, everything is kosher, but continuous monitoring then becomes a huge problem, because obviously the vectors of attack continue to evolve from organized actors. So what's your read on the state of DeFi and sort of the current event, but just in general, what you're seeing?
Yeah, I think this was shocking, partially because the number of code exploits have been decreasing across the board. And so to see something as systemic as this on an OG protocol, it's just like, man, how many security researchers are there that this completely flew under the radar? So I think that was a little bit upsetting. Obviously, to look at maybe the good points here. The incident response teams, they came into action fairly quickly, right? If there were tokens that had some kind of centralized ownership, then they basically were able to pause funds. I mean, the nuclear option was triggered in some cases where, hey, let's just patch validators and start to blacklist the attackers' wallets and transactions, and even just pause protocols entirely. So, I mean, that was the saving grace of this. I think the worry ultimately is that we are moving rapidly into a world where AI is favoring both attackers and defenders. I mean, there was a lot of chatter about this being a vibe hack, right? But after looking at it, is way too sophisticated to be a vibe hack. But the reality is, Claude is being used devastatingly effectively to identify vulnerabilities, maybe faster than defenders can patch them. So I think we are going into a space where you are going to have to do constant sort of pre-flight checks, right? The way I think about security, very much before you fly that plane, do as many audits as you can. Do all of these pre-flight checks. But once you're in the air, you need to be, you need to be monitoring. You need to have air traffic control. You need to be making sure that the engines aren't going down. And so, what I think we're moving very quickly into is a race to have as much runtime or as much observability as possible. And this is going to be things like, can we continuously monitor a live code base and constantly red team this? And it's going to take a lot of compute, but it's definitely worth it. It's definitely worth a $125 million loss. So I think in the long run, we're still seeing the trend that code exploits are trending downwards just because we're learning from them. But the reality is, AI presents a real and very tangible attack vector, or essentially an enablement vector that attackers are now exploiting. So, yeah, I wouldn't say the message is not like, hey, balancer is bad. The message is like, look, even if you're audited, even if you're set up, even if you have great IR, primitives do fail. So your risk model somehow has to assume that failures are going to happen and that you need controls to contain them as quickly as possible. Yeah, so that's what I'd say about balancer.
Nice. Chilli, I see you came off. Did you want to add something there?
No, I mean, I think just a small point is before Redstone, I was also into cybersecurity. So one of the most fundamental aspects that about cybersecurity on the hack side is that it's not about what has happened in the past, but it's about the new ways that can happen in the future. So with AI, we used to think that, that's difficult for it to learn, but with at the pace the computer is popping up and the kind of training materials that are being used to train AI, I think there's a good side where Aneirin mentioned that it can be used to counteract it, but there's also the negative side of it, where it's the same data can be used to teach the AI how to predict what kind of stuff should be done in the future to get a hack, So I think it is a double-edged sword, in my opinion. Hopefully, we come to a place wherein, based on the researchers and everything, and most importantly, the good people in the space, maybe we come to a situation where we can tend to avoid, like you said, obviously the hacks are going down, but even I was super shocked. Like, I don't think any of us expected balancer to go down, quite frankly. And this again is a big learning, right?
So maybe Cholo, I'll start with you on the last one. I mean, we've talked about a lot of different considerations, right? Like product construction, risk curation, security hacks. So for anyone that's trying to build new products now, and I'll ask everyone the same question, but what do you think is the single most important consideration to properly sell something that users should be looking at in today's market?
Yeah, I think all of it matters actually. I think all of it, a lot of times, the unfortunate thing about things like security, Oracle design, as well as kind of transparency and proof of reserves, is that people don't think it matters until they actually matter, and then when they matter, they actually tend to matter a lot. So a lot of founders, because they're maybe sometimes it's not malicious, they are just running at it at 100 miles per hour. They kind of try to cut corners because maybe there's a deadline. Maybe their VCs tell them that you have to launch now, capture this narrative. Maybe they want to just get to that milestone pretty quickly. There's a whole host of factors that may drive founders to move fast and figure things out on the fly. But yeah, some of these things, because they're dealing with real money, they tend to be something that is exploitable pretty easily with the comments made about AI. And when they're exploitable, they actually have a very big business impact and a very big operational impact. So I would say, just from a founder standpoint, the best way is probably maybe slow down every now and then, and before you go to launch, before you go and make any large decision, I think you should take a pulse of what the market out there is doing. So I think for us, we work with all three of the folks here on this podcast. Whenever we kind of come across a crossroads where we need to make a design choice, we actually consult with our partners, because they would have seen more than what we have seen, and they can kind of advise us on what market practice is and where the puck is headed in a certain sense. So yeah, I think for founders, really look at your kind of vendors and service providers as partners, and take their pulse and take their advice on things that you may not know as well. And yeah, just make that as part of a process when you kind of make design decisions, and that should help you at least try to get ahead of some of the things that are happening that you may not be aware of.
Maybe Wojtek, then Aneirin, then Chilli. Same question.
So I think, things are evolving, right? Because what was nice to have, for example, this proof of reserves, now should become your go-to starting point, right? You have a smart contract audit, you have stuff like hyper-native, failsafe, and so whatnot. You have proof of reserves, you have an oracle. You can survive that. You can, right? But this is how you should start thinking about opening up a business. You need to have those building blocks and then run the business successfully. So I actually didn't expect that, especially on the proof of reserves, this will come so soon. I thought that first we need to build a pipeline of, let's say, 30, 40 people that are using it, and then the rest will start to be like, okay, these guys can use it as their edge. They can, show it around to every single person and be proud about it. And we are more and more looking shady and shady over time. So the situation on the market definitely accelerated that thinking. And now literally every single day, 3, 4, 5 counterparties coming. We need it platform wide. We need it for this product specifically, and so on and so on. So definitely, wouldn't expect that. And if we really get to a point where there is indeed these 30, 40 counterparties, then you can clearly distinguish verifiable yield options, unverifiable, right? And then it basically provokes these guys that are not to do the same, because in order to compete, you need to have the same level of safety. It's again similar analogy. You don't have a smart contract audit, you can't compete no matter what your product is and how good it is. So glad to see this is happening. We need to use this momentum to demand as much as possible, because this will be the next bar, right? And something will go down again, even with this bar, and then we're going to demand more. And this is how this works. So very happy to see that. And we are trying to do whatever we can to address absolutely everybody. Think this will become a huge business on its own, given the amount of tokenization that is happening. That's why I'm very happy to work with Redstone on it. They see a potential on this side of industry, and that's how it's gonna be, right? DeFi options are limited. Everything moves, we are bringing TradFi yields from many different structures on chain, and this is not looking like it's stopping. The market can be whatever, but the truth is just the operationally and how nice it is to participate in those products on chain. I don't think it's stopping even in a bear market. Maybe there will be less money, but there will be people that will be looking at it as a way to go. So just rethink what you prioritize, because at one point it will backfire, and if you don't have the right foundation, we won't be able to compete on the same level, no matter how good the product is.
Yeah, trust is it's such a fragile thing, right? And it takes years to build up. And it's just if you didn't do this one thing very early on in the journey, or if you hired that guy that kind of screwed you, or if you had that ex post that is coming back to haunt you, it's one black mark, just ruins everything. So yeah, it's a tough space to be in, the trust and safety space. And so completely echo that. Just make sure your foundations are right. But I think if you're a builder, your team will march to the beat of your drum. And the thing that I get excited about is finding founders that see security as a mindset rather than a department. And so, these are folks who understand things like defense in depth, being extra paranoid when it comes to hiring people, or making sure they have things like disaster recovery and contingency plans in place. And military guys, TradFi risk assessment guys are fantastic for this. So I would say that's the first thing, right? If you can inculcate security as part of the culture, that I think is fantastic. The second thing is figure out what defense in depth looks like. Failsafe is called Failsafe because we assume that things will fail. And so you need mechanisms in place that will default a system to a safe state in a worst case scenario. And we need to move forward basically with that assumption. We're playing with people's real funds, real money. And so you have to assume that on the other side, you have a highly organized, highly motivated, highly well organized and well funded attacker that is going to look at your protocol and go, hey, this is a fantastic payday. So I would say, yeah, clear sort of defense in depth and figuring out what your strategy is there would be what I'd suggest is a good place to focus on if you're a builder today.
All right. A couple of things I really agree with Aneirin, and the way I look at it is a bit different, guys. So I think audits, at least for the last few years, have become the painkiller category in crypto. Right, they have always been, because especially for larger projects, it's super important. But I think we need to get to a stage where something like accountable and secure oracles are also considered a painkiller and not a vitamin, like what Wojtek was saying, like not a good to have, but actually a painkiller. Because it's very simple, right? I mean, uh, again, going back to our conversation, one of the projects we chatted with, imagine being so important, so well funded, and not even having clarity on what actually POR is. I mean, if you're going to be a builder with a team around you and this is how you're going to talk, I already have lost faith in you, right? Because you need to first at least have your basics in place. I mean, how are the users ever going to trust you if you yourself don't know what you're building, first of all, right? On the trust aspect. So I think that's very, very important. The way I see this evolving is over the next 2 to 3 years, I think proof of reserves, all of the range of things that accountable can do, and something like what we have done at Redstone, basically maintaining zero hack, zero mispricing, all of that. I think this will become a painkiller and not a vitamin, because as people understand what are the multiple failure points where things can go wrong, and what of those failure points are already taken care of, which is audits, obviously the biggest one. That's why we consider it a painkiller. I think when people come with that mentality that, hey, no, proof of reserves and having a safe and secure oracle is also a painkiller and not a vitamin, I think that's when I would say that we have arrived at a stage where the industry is maturing towards identifying security as not just an audit aspect, but also a multifaceted aspect, right? On all of these fronts. So I think that's what I feel. And we are definitely getting there. But I also think that unless and until this is communicated through all our voices, being bullish on it, I think the user will never really think of it as being that important unless we show them why it is so important. So I think that is something that's missing, and we are trying to solve it, through the marketing that we do. I'm pretty sure Accountable is doing the same. But I think we are a long way from where the user actually goes to our protocol and be like, hey, okay, they have audits from Failsafe, wonderful, those are top tier guys, but how does their proof of reserve work, or how does what kind of oracle structure do they have in place? What is the liveliness? What is the heartbeat? What is the deviation? Right? So I think unless and until a user at the end story understands what is the liveliness of the protocol, I think we are not going to get there.
Maybe I would add that sometimes people need to see a negative balance on their wallet and then question what they do, right? So usually it's like with pain comes some solution. What I didn't like about after FTX happened, that a lot of exchanges started doing proof of reserves, but there is zero proof about what they do. Like I remember Kraken was doing proof of reserves based on an audit from 2 years ago, and you as a user can come in and check that yes, they have your money based on information from 2 years ago. In reality, all of these exchanges, what they do, they claim that they have the money and they give you a fancy miracle proof basically system that you are part of that claim. But nobody first verifies like what's under the hood, and most importantly, what are the liabilities of these exchanges, right? Because I can prove I have 100 million, but what if I have liabilities of 200 million? Then it means you as a user own nothing. So that will be another very big thing, and that's why we also got OKX on our cap table, because we need to create the very first example of an exchange actually treating this issue seriously, because that's another ticking bomb, right? It was never solved after FTX properly, and it was just like to do something to call it fancy schmancy proof of reserves, but in reality nobody is doing it the right way, and I hope not, right? Because then all of us will be affected, and it's not like one stream finance here and there. But you remember, after FTX happened, everybody thought that Binance is going down as well. USDC depegged, right? It was horrible time. At that point, I thought like, I need to get out of crypto, to be honest, because if I'm waking up with my USDC worth 20% less overnight, there is no safe place in crypto, and only Bitcoin, right? But nobody wants to keep their net worth in Bitcoin. So ton of work, every single institution out there that we are relying on should be transparent. And exchanges are also a ticking bomb. MEXC, right? Like everybody was talking, MEXC going down for like the 10th time. Like, guys, let's just do it one time properly. It should be visible. Bybit hack, right? Nobody knew. Are they going to survive or not? If you would have this type of information that you can trust in front of your eyes, you would be seeing that they have enough money or they can get enough money to fill that hole. So long way ahead of us. Sorry, Chilli, I actually took over because you disconnected.
No, please. I mean, it's fine. I don't know why the internet is so weird. But in any case, I think just because you mentioned exchanges, it's funny enough that after all of this shit happened with Balancer and everything, we also saw interest or potential rather, where we could. I mean, I'm not really sure how technically feasible it is right now, but we're looking at it that how can we work with exchanges to make sure that we give some kind of confidence to the end user, stating that okay, this is the kind of stuff they have in their treasury for that matter, or these are the essentially their proof of reserve, so to say. Can we build something like that, right? So that we at least have a bit of a confidence that things are not going to go upside down. But yeah, like Wojtek said, long road ahead of us. And I feel also for the end user, something that we are doing at Credora will be very beneficial, because once you start rating the assets, I think you have at least a starting point, right? Because till now, there is no starting point for you to figure out, okay, is this good or is this bad, apart from you going deep diving and doing your research. But I think Credora can potentially solve that problem for the end user just in a couple of clicks. So yeah, super excited on that. And I think some of the things should be up and running real soon. So yeah, keep an eye out on that for sure.
Awesome discussion, guys. And with this panel, we could go on this for much longer. We want to switch to a fun segment that we like to do on the podcast. It's called the rapid fire round. So for everyone here, so I'll ask the question, and just to traffic cop, maybe Cholo, Aneirin, Wojtek, then Chilli in that order. 5-second responses, no thinking. 5 questions. Let's go. The first one: what's your most painful rug to date, this cycle or last?
Oh man, I think nothing can still nothing can beat UST Terra Luna. That was painful. I mean, both direct and indirect. Like direct, just like losing money on Anchor, and also indirect, just like what happened to the market a couple of months or like immediately after.
No,
Go for it.
no, you go.
This is just a personal one. I'm not going to name them, but I was so bullish. Korean IP, early in, heavily indexed on it, massively sniped, and yeah, it's still dead today.
So for my side, I was an early investor in Olympus DAO. And maybe you remember that afterwards there were a lot of copycats, right? And that was a great top signal in general, which of course, when you make a bunch of money, you don't think about, and you're trying to diversify those bets across these copycats, because actually Klima DAO, that was the second one after Olympus, also did very well. And then there was something called Anubis DAO, and I think Mr. Sisyphus, that is still present very much on Twitter, and that ragged us from $30 million. So if you watch this, like, I will remember, I lost not a lot because I was not stupid enough to put a lot of money there, but that was like the such bullshit. Like, they proved it basically that he did it, and this money is still there, and people still comment and treat this guy like seriously, that you're TA god, whatever. Like, one day somebody will find you, my friend. So it's not gonna be me because I don't care that much, but people remember.
Yeah, I think for me again, I think it's Luna too, like Cholo mentioned, and not because just the token of Luna, but I think that back then I was so fascinated by the fact that, oh, algorithmic stablecoin, wow, I think this has such potential, and this is much better than maybe USDT just lying about the fact that they have US dollars in the bank. I don't know if they do, but an algorithm maybe is a much better option. And I had a bunch of stables in that, and yeah, I mean, there was no point of recovery also. So yeah, for sure, for me as well, it was Luna.
All right, next question. I'll try not to be too biased with this one. What day does the Monad ICO hit its fundraise target, if at all?
Wait, sorry. What
Nice.
date?
What day is the Monad ICO going to hit its fundraise target? So the 187 million or whatever the target is.
Oh, okay. I think tomorrow, actually. Yeah, tomorrow.
November the 23rd.
But they filled in. I read somewhere today that they're at like 50%, 45 or something already. What is this? Mega ETH also? No, oversubscribed was actually very soon, right?
Yeah.
To be honest, I know this topic is a bit weird. Why would you do that, right? Like you raised already so much money and everything. Anyway, I don't know. Wishing all the best to Monad. Hopefully they're gonna be oversubscribed soon. Time will tell.
I think my answer is the same, 22nd or 23rd. Because I feel that the curve is gonna flatten now. So probably 22nd, 23rd.
It's a novel distribution metric, and so we'll see how it tracks. But good luck to Monad. Next question on that. Who do we think is the next ICO candidate? Coinbase is only going to list one per month. So who do we think is the next ICO candidate?
Oh, for Coinbase.
On Coinbase.
Oh, interesting. I haven't really tracked it. I would say, well, no, not Flying Tulip. I only know what I know. So, Base. I'm gonna say Base. Just gonna cop out.
I think Base. Somebody sent me a message that Base is confirmed in December or something. Is that true?
There you go.
Like not as an ICO, but that there will be a token.
Yeah, airdrop, right? Yeah, I think so. I mean, they've already said they'll have a token. Just like
Yeah,
for
exactly.
Christmas. For Christmas, amazing. We can buy some gifts, or of course keep it, right?
Yeah.
Yeah, I mean we're big on Base, so gonna say the safe thing to say is maybe Base.
Yeah, and Mega ETH, right? Like Mega ETH, it's a natural candidate. They are going live, I believe, 8th of December. I think that's the latest one. So maybe. But yeah, Chilli, you work with them, so you know maybe.
Yeah, exactly. I mean, I don't think they are probably taking that route. And also, second thing, I'm very close to the whole Base team, so I'm also super bullish on the fact that it is going to be Base. And just my 2 cents here is, it's common sense, right? I mean, it's a tug of war now, because if they launch their own token, then it'll be basically them trying to move away from Ethereum, and then it's going to be a big whole scene. So I think that's the whole thing that's keeping them holding yet. But I'm not really sure. I think if they do launch it, I think it's going to be December. But it's not going to be as easy a decision, is what I feel, because everybody that I chat with in the Base ecosystem, everybody's torn, because I mean, ETH cannot lose Base, right? I mean, at least what has happened over the last couple of years, I think it's a major player. So let's see. But again, to the answer to the question, my answer is Base. Yeah.
But is it a plan that it's gonna be a gas token for the chain, or something like Optimism?
So I think the plan, as far as I know, is that they would want to do away with ETH as gas and use their own native token as gas, and that is where the tug of war is, because then the whole ecosystem side of Ethereum is gonna be, messed up. So personally, I don't want them to do it, because I love ETH way too much for that, quite frankly. But yeah,
you love your bags.
Not love my bags. I mean, it was one of the first cryptos, right? I mean, I don't have anywhere close to the bags of most people, but it's just that the whole ethos of it, right? But yeah, I mean, let's see. I don't know. It's super complicated, and even if they launch a token, I think a distance from Ethereum means losing a big chunk of your user base. So let's see.
But in general, let's see if ICOs are back. Let's see if it starts new cycle.
We are looking at the trend, Patrick, quite honestly. I mean, I didn't expect it to be. I don't even know why they're back, but it seems like they are.
airdrop
Maybe we
fatigue.
should do an ICO, and maybe MU guys should do an ICO, right? These were the good times. That was when I was starting on the
Yeah.
market.
Yeah.
Speaking of like things that were not required back then, no audits were required in the 2018 ICO boom. Like the amount of things that launched without an audit was unreal.
Yeah. You're right.
Times are changing. Last question on this one, and I always like to do this. Not financial advice for anyone. What's everyone's Bitcoin prediction? The top for the rest of this year.
Oh, the rest of the year. Okay.
Dude, at the earlier
the bottom rather.
Earlier episode of this podcast, I was saying like 200, 250. I think I would be happy if it gets back to 120K, to be honest.
It looks bad. Sometimes when it looks very bad, these are the times to reverse. But I don't know, like the whole apathy of the market that like people, I think they stopped believing for some of the right reasons, right? Like, how is your favorite shitcoin gonna ever recover? There is just way too many, and there is not enough interest. And TradFi actually performed, or gold, way better than crypto for risk-adjusted returns, right? What did we do the last couple of years, right? Like we spent time on something with super high risk and not super high returns, actually. So the paradigm is shifting. ETFs are driving where that is going. To be honest, if Bitcoin would end up at above 100K end of the year, that would be a very strong signal that we can defend what it is today. But to be honest, if it goes much lower, I also wouldn't be surprised.
It's at the beginning of this year, I mean, you'd listen to the panels and they were like 180, 200. But yeah, I think my conservative is 105, 10 would be happy.
Yeah, me too. I think by December, probably,
Chilli.
if we cross. Yeah, same. I think by December, if we cross 110, I'll be more than happy. And I mean, people can hate me for saying this, but I'm one of those people who I actually believe that we hit the top already. And people can speculate it'll go much higher. Yeah, but at least for this year, I feel we have hit the top for sure. Everybody was thinking, the upward curve. I think October 6th was the day where everybody was, talking so much on Twitter that no, even the astrologers and everybody have predicted that this might top out and all of that. Yeah, but I think I feel that we have topped out for this year for sure. I'll be happy if it's 110 by December. More than happy, actually.
Notwithstanding market sentiment today, let's stop this on a positive note. So we're coming to the top of the hour. Maybe final shills from all you guys. Exciting time for all of us. A lot of launches and stuff in the market. But maybe Aneirin, Wojtek, and Chilli, do you guys just want to give final shills for the users and what they should be looking out for?
Yeah, we are doing a lot of agentic stuff, which is bringing down the cost of audits and just bringing down the time taken as well. And this stuff is performing better than manual security researches. So we want to throw it as many protocols as we can. So hit us up if you that.
Final shill. Take a good look at MU Digital, at accountable vaults, at Redstone. So proof of reserves, verifiable yield, the theme for the coming months, hopefully forever. So 24th is the date, right? Hopefully, right? Like nobody knows. Delays are the nature of this industry. So time will tell.
Yeah, I mean, my shill is exactly the same. Don't miss MU, don't miss accountable. Of course, don't miss us. But at a general perspective, I would just tell the users that, of course, none of us ever really learn in crypto because we keep repeating the same mistakes, keep taking the same gambles. But based on whatever has happened over the years, focus something on what, like specific products like what MU is building. I think stable coins, LSTs, LRTs, a little bit of safer bets where you can park your capital. And before doing that as well, use accountable and Redstone to further your decision that, okay, this is good stuff rather than just speculation and is not really backed by anything. So I think that's my 2 cents. Yeah. Play with lesser volatile assets, safer assets, and instead of trying to do 10x's or 20x's, try to loop in and maybe just get some better yields on your stables, right? So at least for the near future.
Cholo, anything for our side?
Yeah, well, 24th of November, that's the date. So we'll be live on Monad day one, and we'll be integrated with a
Let's
bunch of
go.
partners, accountable, of course, one. So yeah, excited to get our product out there and get you guys to enjoy everything both Mew, digital, and Monad has to offer. So looking forward. See you there.
Awesome. Yeah, guys. Yeah, I just want to say for all three of you guys, we really appreciate you guys. We're stoked to be even having this conversation. The reason we like partnering with you guys is because we do take all of this stuff on trust, security, building things in a transparent way. It's the way we built our protocol. We really appreciate working with you guys and all the advice along the way. So we look forward to building that partnership. But for our viewers, please check out everyone here that's on screen. If you don't know the projects, check them out. A lot of cool stuff coming on, and we all hope to continue to build in a way that's putting this whole industry in a positive direction, in a way that users can trust that they're not going to get rugged. They trust they know what they're buying. So that's what we're all building. So that's what we'll leave you with for today. So thanks everyone for joining. GMU.
Thank you.
Cheers.